Welcome. Today, we're diving into the world of golden crossover stocks, a term that's gaining popularity among traders and investors. If you've ever wondered how to spot the early signs of a bullish trend in the stock market, understanding the golden crossover is a great place to start. This video will break down what golden crossover stocks are, why they matter, and how you can use this signal to inform your trading or investing decisions. Let's begin by exploring the basics and setting the stage for a deeper understanding of this powerful technical indicator. Golden crossover stocks are those that have experienced a specific bullish crossover in their moving averages. More precisely, this happens when the 50-day exponential moving average, or EMA, crosses above the 100-day EMA. This crossover is a technical signal that suggests the recent price trend is gaining strength compared to the longer-term trend. For many traders, this is a sign that a stock may be transitioning from a period of consolidation or even a downtrend into a potential uptrend, catching the attention of those looking for upward momentum. To fully grasp the golden crossover, it's important to understand moving averages. Moving averages are tools that smooth out price data to reveal the underlying trend. The 50-day EMA reacts more quickly to recent price changes, while the 100-day EMA reflects a longer-term perspective. When the short-term average overtakes the long-term average, it's often interpreted as a shift in momentum, signaling that buyers are becoming more active and optimistic about the stock's future. The golden crossover is more than just a technical pattern. It's a signal that the stock's short-term momentum is improving significantly compared to its longer-term average. This pattern often attracts renewed investor interest, as it indicates the possibility of further price increases. When the shorter moving average moves above the longer one, it typically means that recent prices are higher than the longer-term trend, which can be a sign of growing optimism and the start of a bullish phase. While the golden crossover is a positive signal, it's important to remember that it doesn't guarantee continuous gains. Market conditions can change rapidly, and no single indicator is foolproof. The golden crossover simply suggests that conditions are favorable for upward movement, but traders and investors should always use additional tools and analysis to confirm the signal before making any decisions. The golden crossover forms when the 50-day EMA, which tracks recent price action, rises above the 100-day EMA, which represents a longer-term trend. This crossover typically follows a period where the shorter EMA was below the longer EMA, indicating a shift from weakness to strength. Traders watch for this change as a sign that the stock's momentum is turning positive and that a new uptrend may be starting. The key insight from the golden crossover is the relationship between short-term and long-term trends. When the short-term trend, as shown by the 50-day EMA, overtakes the long-term trend, it suggests that recent buying activity is outpacing the past. This shift can be an early indicator of a broader change in market sentiment, making it a valuable tool for both traders and investors. When a golden crossover occurs, it tells us that the stock's short-term momentum is improving relative to its longer-term average. This often reflects renewed investor interest and can indicate the possibility of further price increases. However, it's essential to approach this signal with caution and consider other factors before making investment decisions. A golden crossover is often seen as a sign of growing optimism among investors. When the 50-day EMA crosses above the 100-day EMA, it suggests that recent prices are higher than the longer-term trend, which can mark the start of a bullish phase. This optimism can drive more buying activity, further supporting the upward movement in the stock's price. It's crucial to remember that while the golden crossover is a positive technical signal, it is not a guarantee of future gains. Market conditions can change quickly, and unexpected events can impact stock prices. Always use the golden crossover in combination with other analysis tools and risk management strategies to make informed decisions. To identify golden crossover stocks, traders use specific filters. The first filter is that the 50-day EMA must be greater than the 100-day EMA. This confirms that the short-term trend is now stronger than the longer-term trend. The second filter checks that, prior to the crossover, the 50-day EMA was below the 100-day EMA, ensuring the crossover is recent and active. The first filter for identifying golden crossover stocks is straightforward. The 50-day EMA must be above the 100-day EMA. This condition shows that the short-term trend has overtaken the longer-term trend, signaling a potential shift in momentum. Traders look for this as a confirmation that the bullish crossover has occurred. The second filter ensures that before the crossover, the 50-day EMA was below the 100-day EMA. This confirms that the crossover is recent and not just a continuation of an existing trend. By applying this filter, traders can focus on stocks where the bullish signal has just appeared, increasing the chances of catching an emerging uptrend early. Filters are essential for narrowing down the list of potential golden crossover stocks. By ensuring that the crossover is both recent and significant, these filters help traders and investors avoid false signals and focus on stocks with the highest potential for upward movement. This targeted approach increases the effectiveness of the golden crossover strategy. One of the main takeaways from the golden crossover is that it's often viewed as an indicator of a bullish trend starting. This signal highlights an improvement in the stock's short-term momentum relative to its longer-term trend, making it a valuable tool for those looking to identify early signs of upward movement. Another important takeaway is that the golden crossover often signals renewed buying interest. When the short-term moving average crosses above the long-term one, it suggests that recent buying activity is outpacing past levels. This change in sentiment can lead to increased demand and higher prices. The golden crossover can also suggest that a stock is transitioning from a weaker phase into a period of growth. Traders and investors often see this as an opportunity to catch an emerging trend early, potentially benefiting from continued gains as the uptrend develops. It's important to remember that market conditions can vary, and a golden crossover does not ensure a prolonged uptrend. External factors, such as economic news or broader market movements, can influence stock prices. Always use the golden crossover as one part of a broader analysis strategy. Golden crossovers offer strategic insights for different types of investors. For traders, these crossovers can highlight short-term opportunities to profit from momentum. Long-term investors might see them as a signal to initiate or increase positions if the broader trend supports sustainable growth. Let's look at how a golden crossover might appear on a stock chart. Imagine a period where the 50-day EMA is below the 100-day EMA, indicating a weak or consolidating trend. Suddenly, the 50-day EMA rises and crosses above the 100-day EMA. This crossover is the moment traders watch for, as it signals a potential shift in momentum and the start of a new uptrend. Momentum is a key factor in market psychology. When traders see a golden crossover, it can spark increased optimism and buying activity. This collective behavior often reinforces the uptrend, as more participants jump in, hoping to benefit from the anticipated price rise. Traders closely monitor moving average crossovers because they can signal changes in trend direction. The golden crossover, in particular, is seen as a reliable indicator of a shift from weakness to strength. By catching this signal early, traders aim to position themselves ahead of a potential rally. Despite its popularity, the golden crossover has limitations. False signals can occur, especially in volatile or sideways markets. It's important to combine this indicator with other technical tools, such as volume analysis or support and resistance levels, to improve accuracy and reduce risk. To get the most out of the golden crossover, many traders combine it with other indicators. For example, confirming the crossover with increased trading volume or checking for support at key price levels can provide additional confidence in the signal. This multifaceted approach helps filter out noise and improve decision-making. It's helpful to compare the golden crossover with its opposite, the death cross. While the golden crossover signals a potential uptrend, the death cross occurs when the short-term moving average falls below the long-term average, indicating possible weakness. Understanding both patterns can help traders navigate different market conditions. Golden crossovers are most effective in bull markets, where upward momentum is strong. In these conditions, the crossover can signal the start of a sustained rally, giving traders and investors a chance to participate in the growth phase of the market cycle. In sideways or choppy markets, golden crossovers can produce more false signals. Price movements may not follow through after the crossover, leading to potential losses. That's why it's important to assess the broader market context before acting on a golden crossover signal. Volume is a key factor when evaluating a golden crossover. A crossover accompanied by high trading volume is generally more reliable, as it indicates strong participation from market players. Low-volume crossovers may lack conviction and are more likely to reverse. Support levels are another important consideration. If a golden crossover occurs near a strong support level, it can increase the likelihood of a sustained uptrend. Support acts as a floor, helping to prevent prices from falling back below the crossover point. Resistance levels can also play a role. If a golden crossover occurs just below a major resistance level, the stock may struggle to break through. Watching how the price reacts to resistance after the crossover can provide valuable clues about the strength of the uptrend. Risk management is essential when trading golden crossovers. Setting stop-loss orders and defining position sizes can help protect against unexpected reversals. Always have a plan in place to manage risk, even when the technical signals look promising. Short-term traders often use golden crossovers to identify quick opportunities for profit. By acting on the signal as soon as it appears, they aim to capture gains from the initial burst of momentum that often follows the crossover. Long-term investors may use golden crossovers as a signal to initiate or add to positions in stocks with strong fundamentals. If the broader trend supports sustainable growth, the crossover can serve as confirmation to invest for the long haul. Golden crossovers can occur in any sector, from technology to healthcare to finance. The key is to look for crossovers in sectors that are showing overall strength, as these are more likely to result in sustained uptrends. Timing is everything in trading. The golden crossover can help traders and investors time their entries more effectively, allowing them to participate in the early stages of a new trend rather than chasing after prices have already moved significantly. For portfolio managers, golden crossovers can serve as a tool for rebalancing. By identifying stocks entering new uptrends, managers can adjust their holdings to increase exposure to assets with positive momentum, potentially enhancing overall portfolio performance. Many automated trading systems use golden crossover signals as part of their algorithms. By programming these rules, traders can ensure consistent execution and remove emotional biases from their decision-making process. The golden crossover is a staple of technical analysis. It's widely used by traders and analysts to spot potential trend reversals and confirm bullish momentum. Understanding how to interpret this signal is a valuable skill for anyone interested in the markets. While the golden crossover is a technical signal, combining it with fundamental analysis can provide a more complete picture. Look for crossovers in stocks with strong earnings, revenue growth, and solid business models to increase the odds of success. Major news events can impact the effectiveness of golden crossovers. Earnings announcements, economic reports, or geopolitical developments can cause sudden price movements that override technical signals. Always stay informed about relevant news when trading crossovers. Market sentiment plays a big role in the success of golden crossovers. Positive sentiment can amplify the impact of the crossover, while negative sentiment can limit its effectiveness. Gauge the mood of the market before acting on technical signals. Trading psychology is crucial when using golden crossovers. It's easy to get caught up in the excitement of a bullish signal, but discipline and patience are key. Stick to your strategy and avoid emotional decisions to maximize your chances of success. Backtesting is a valuable step when using golden crossovers. By testing the strategy on historical data, traders can evaluate its effectiveness and make adjustments before risking real capital. This process helps refine entry and exit rules for better results. In summary, the golden crossover is a powerful technical indicator that can help traders and investors spot emerging uptrends. While it's not a guarantee of success, using it alongside other tools and strategies can improve your chances of making informed decisions. Remember to stay disciplined, manage risk, and always keep learning. Thank you for joining us on this journey through golden crossover stocks. We hope you now have a clearer understanding of what they are, how they work, and how you can use them to enhance your trading or investing strategy. Stay tuned for more insights and happy investing.